This video is about support and resistance, and let me kind of give you some ideas here. Number one, support is on the bottom and then resistance is at the top. It's also known as supply and demand. And so when you're doing your technical analysis, you're using historical price to project future price. What we look for in support and resistance is it's an area or deciding point where the market may go. Either it's going to bounce off of it or break through it. Now there's different ways to determine if it's going to break through it. If it's trending, then the possibility of the market to break through resistance is greater than if the momentum is going upwards, okay, with the day chart. So it depends on your point of view of these areas, but let me kind of simplify some things. So again, support and resistance is areas that the market has broken through, and how can you tell which one's support, which one's resistance, and which lines to draw? Well, you can see here there's peaks and valleys. You have a peak, you have a valley, peak, valley. Which one can you consider? Really, you want to look for the extreme prices, areas that the market has moved away from very quickly or bounced off of very quickly. So you can look at here on the left-hand side, came down very quickly and bounced off of it very quickly. Again, with the idea of support, it's not exactly a precise price, it's a general area. So if we consider the body and the wick, so you have the wick, it's a general area. So when the market was right here, okay, like this, and bounced off of it, later in the future there was a deciding factor here. Either it's going to bounce off of it or break through it. So here we can look at the candlestick and what it's going to do. Here we had a very strong candlestick, indication of a strong swing upwards, closing surpassing the price up here. And then you can see this was a retest, and then you have an engulfing pattern and pushing upwards. So again, with the idea of support resistance, it's an area that the market struggles. Either it's going to break through or bounce off of again. So here we have resistance or support, and then it became resistance. So later down the road, once it broke through it, it may act as support. Let me kind of show you how significant these prices are. We can actually drag this back in history and see that the prices are very obviously represented or respected. So like I said, if you're looking at this price right here, let me actually delete these other three lines here so I can clarify myself here. You saw that the market reversed here. Again, the market reversed here. So this already happened. So historically, what we can do is once we see the price approaching this area here, this is resistance level, then let's consider the body and the wick. In this general area, then I'm going to be looking for reasons for it to bounce off of or break through it. So you can see that the market had to travel a long ways to get back up to this area, so we saw a great opportunity for it to get rejected and trend back down to the support level that was identified right here. Okay, so how accurate are these prices? Let's actually just have these prices here. Now this concept can actually work on any time frame, any currency pair, and basically any trading style. One thing to consider is if you actually use the smaller time frames, you're actually breaking down, like I said before, you're breaking down that candlestick. And we can kind of go over that concept before, but I'm just going to kind of pull this back here and just show you those three lines that are drawn, if they are still represented back in history. Okay, so I'm going to pull this back. So historically, these areas have been represented. We could probably pull back more and more, but what I'm saying is that these general areas, like I said, here's your body, here's your wick. And if you're looking at that reversal candlestick concept, here's your reversal back down to support. Okay, just down in this area here. So does support and resistance work? Absolutely. If you can understand the concept of that it's not an exact line, it's a general area, and that you can see that if it breaks through support, then it may act as resistance. So let me actually show you that. So here's your support level that we have drawn. It broke through. It's that general area. Couldn't reach higher than this swing high that it created here, signifying some weakness. Came back down and retested. So the support level became resistance, and then continue going downwards, trending downwards quite a bit. So again, you can see these support and resistance levels right here. Again, support, another bounce, 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 and because the momentum was downwards, here's your break, breakout, retest, push down. Okay, so again, to understand support and resistance, what you're looking for is either it's going to bounce off of it or break through it. How can you signify that? Is you look at these candlesticks and looking at how the price is reacting. Another way to look at support and resistance, and if we look at the day chart here, I'm going to clean off the chart. Now, if we actually decide to trade off the day chart point of view, then we're actually considering a lot more data, and these levels are a lot more significant, meaning that it's comparing the 1 hour chart is almost like comparing a small like a wall versus a dam. Okay, so the day chart is more of a dam, first, meaning that if there's resistance and if it breaks through, then it's going to continue for quite some distance, is kind of the analogy. Like I said, with looking at these levels, if you're actually going to base your trades off of the day chart, you're looking at the extreme highs, the extreme lows, whereas the market has reacted. We can look at these as the major levels that we can identify. So if it breaks through this price, I may trade back down to this price here. If it breaks through this price, then I'm going to trade back down to this price. And then once it gets to this price here, then I may look for a reversal because of how it reacted back in history. So with, again, just to really clarify that it's not the exact price, it's the general area depending on what kind of candlestick you're looking at. So if we consider the wick here and the body here, see how big of a candlestick breached through it, and then here's your retest. It tested it actually twice, and then it kicked off, continuing an upward trend. So you could actually have a very small, considerably small stop loss on a day chart point of view with a very large take profit. Okay, so if you're extremely busy and you're not able to look at the charts as often, then looking at day charts, weekly charts, or monthly charts, not only you have a bigger point of view, but you're also able to take advantage of these bigger moves, and you have a lot more reaction time. Whereas if we actually clean off the chart again, and if we kick down to the 5-minute chart, again, what we're doing is we're breaking down that 5-minute or one candlesticks of the day chart, and we're breaking it down, and we're actually considering this to be the whole day. So our decision making is the idea of support and resistance works the same, but we may consider smaller projections. So we have here we have support. So once it came back down to support again, we had the opportunity for a buy position, having a stop loss behind this wick for a considerably large take profit for a smaller time frame. So the opportunities may come and go as a lot quicker, and you have to be a little bit more accurate on the smaller time frames, and you have to consider a little bit more as far as like the fundamentals, news, spread widening, and things of that nature. So again, with the smaller time frames, if you're someone that can stick around the charts a lot longer, like I said, your point of view of the charts may be different. So like for instance, you see that this mark has punched upwards like that, and this looks like the resistance. Like I said, it's the general area. If we actually go to the 1 hour standpoint, it's actually only a wick. Okay, so these engulfing patterns on the smaller time frames like this is an engulfing pattern right here, is actually a wick formation on the bigger time frames. So what I'm saying is some people's point of view is on a smaller time frame it may look like it's going upwards, But in reality, if you are someone that's considering the bigger time frame to place your trade, then the momentum here is going downwards. Okay, so just to simplify things again, like I said, support resistance is just an area that the market is a deciding factor of where the market may go, as it's going to either bounce off of it or break through it. That's all you have to know. And depending on what time frame you like to trade and what kind of trading schedule you may have. But if you are someone that likes to look at the bigger opportunities, then you may want to consider the day for the 1 hour chart. That's just a personal preference to help you look at bigger projections. Thank you very much.